Good day, everyone. Welcome back to Fighters Trading Channel. Back again with another daily market analysis video. I thought it would be important to do an analysis video on this particular Monday. More so, I don't really do Monday videos because I wanted to analyze how the markets opened in relation to the massive liquidity drop which we had from the tariff announcement from last week. So let's take a look at the markets and see what's happening today and potentially plot out what they're looking to do post the open. So without further ado, let's hop into last 100. Starting on the 4-hour chart, we can see that the markets have opened with a gap down. This gap needs to be filled. So as I expected, markets are going to be pushing back up very, very soon. When it's going to push up, I don't know, but I know it will happen shortly. Now, the reason for this is when the market has a gap, this gap does need to be accounted for, it does need to be filled. And for that reason, despite breaking below the support, which we can observe here, I apologize for that. I thought my support was drawn out. Why is it not here? Okay, I'll just draw on it. Here's my charts are just lagging just a little bit. Let's just, excuse me. Boom. So this is where our support was at 17,400 as we marked up yesterday. Not too sure why it's not showing up today though. Okay, better. So 17,400, it dropped below that level of support. So if we were to take a look at the daily, we can see that's where price is currently sitting in relation to the support zone which we had there. Does this mean markets can continue falling? Absolutely. But with the gap that was created from the opening, it does need to be filled first before markets continue to fall. So what do I expect will happen here? Markets pushes up, potentially retest at 19,150 and then pushes further down. We could also just see the gap being filled at 17,400 before markets continue to fall. Now, the reason why I'm so sure of this bullish retracement taking place is that we can also see on the 4-hour chart, we are very overextended on the RSI. We can see we are below 15 at the moment. We're actually at 7. This is way, way, way too low. Markets need to correct. They need to collect liquidity. They need to touch back into their fair market value, which is this zone here at 45.55 on the RSI. So markets are looking to retrace and they will retrace. That being said, we can also see markets are far removed from the 50 SMA on the 4-hour chart. So yeah, retracement definitely imminent here, and I will be awaiting that retracement before I look for short positions again. On the 1 hour, we can pretty much see the same thing, except we see the major bearish candle. And you can see that the way this bearish candle was created, also seeing that it tapped into the overextended region, that this market does need a serious correction, first and foremost, before it pushes further down. However, we can see that this one looks like we have a bit of the 1 hour chart looks like we have a bit of a consolidation in play right now. This consolidation for sure is going to break to the upside. We need to fill that gap. So waiting for the break of the consolidation to the upside, we could potentially trade it. However, again, I want to trade in the direction of the momentum. So I'll just be waiting for that retracement to run out of momentum, see where the opportunity lies, see if it aligns with the 45.55 RSI, close to the 50 SMA, and then be looking for an opportunity. So that is US Tech. Let's take a look at US 30. Oh, my US 30 is a bit messy at the moment, so let's just clean it up a little bit here. Yeah, I was in a bit of a state where I was trying to analyze every single move that happened on Thursday, Friday. Okay, I think that's clean enough. Let me get rid of this one. Beautiful. So let's start with the daily. So per the daily, markets have opened with a drop as well. We can see we already dropped 3% since market open. Price has broken below that bit bullish trend line that we had. We thought that this trend line would hold. It didn't. We've broken below it now, so we will still continue looking for shorts. That being said, markets are in overextended territory on the daily already. Coming into the 4 hour, we are well below the 15 mark. We are overextended on the bearish side, and we do need a bullish retracement to come into the market. So 4 hour charts, we far removed from the 50 SMA. I mean, the overextended territory. We have no levels of retracement where we can see a potential retest, except here at 40,800, potentially even 41,350. So markets could retrace at either one of those two levels. I just want to mark this off for this thing. So yeah. Oh, I'm sorry. I don't know what happened there. Yeah, apologizing. Anyway, let's delete these. We don't need these anymore. Anyway, so markets push back up, test these, and then push further down. We'll also be testing potentially that bearish resistance trend line that we have at play. So let's see what markets does when they do it. What can I see for now? I see strong wick rejections to the downside. So yeah, retracement is imminent. Let's go on to the 1 hour and see what we can see here. Okay, so these are ones from yesterday. I just want to delete these. Okay, so we can see we are in the overextended territory on the RSI. We are far removed from the 50 SMA, having a bit of consolidation. We can see a lot more of the momentum going down on this pair in regards to bullish movements, bearish movements, bullish movements. So break above, push higher towards that 50 SMA. Within that 55-45 RSI zone, I would start looking for sells at that point. But we'll have to wait and see what the markets does. Right now, I'm expecting that bullish retracement before looking for further short positions once the bears take over again. As it stands, though, I do need to mark this level off. I don't know why it's not showing up on our below current time frame and below. Yeah, so we are at that level of support. It has broken below that support. We'll have to wait and see what the markets decide to do. We could retest here at 38,055, drop further, or we can retest all the way back up to 41,345 and then drop. Okay, taking a look at gold. Gold dropped significantly. Actually, at the open, on Sunday close, it dropped below the level which we had marked out. I'm going to delete this. We have two levels there. We can delete this one. This is no longer validated. We'll keep this one because it seems that price is doing something there. So on Sunday, markets dropped significantly, nearly 2.5%. We can see that we are below the 50 SMA and we are below 45, between 30 on the RSI. So what we can observe is that gold has corrected that major drop on the last 4 hour candle that we had on Sunday. Markets have spiked back up. Let's go into the 1 hour and see what we can observe there. So as soon as as soon as the Asian session was active, markets pushed higher. We closed that liquidity gap which we had, and we are currently in a bit of a consolidation upon the 3032 level. What can we expect to see from here? So price is bearish at the moment per the indicators and per structure. We see lower high, lower high, lower high. So I would say right now, best guess scenario is to wait or to expect the spike back up. I think markets are sitting upon this bullish trend line, and this correction here to such a high extent of two levels definitely indicates bulls are looking to take some sort of control here in the short term. Now, I can't see it on the 4 hour just yet, but on the daily, if we were to go back down, we can see that we are hitting that 55 RSI zone and we're close to the 50 SMA. And when we were in these zones in the past, markets pushed higher. And looking at the current pattern which we have here, this is a very bullish pattern. So I would expect the bulls to take control at some point. Coming into the 1 hour, we are in consolidation phase. So within the consolidation phase below the 50 SMA and consolidation on RSI, there's not much indication being provided here that the bulls are stepping in right now. So we'll have to wait, see what happens. But my best guess is that bulls are looking to come back into this market. So I think more so I wanted to take a look at the indices and gold, but because it's a daily market analysis video, we are going to do our main currency pairs as well. So let's get into it. Euro USD. So markets dropped at the open. What we can see is that we had a gap down. Markets opened at 1.0886 despite closing at 1.09625. Market sharply rose from there, and it looks like it tested that 1.0947 level and continued to push higher. So not a lot of bullish momentum as I expected. I mean, there is bullish momentum, but it's low-lying levels, which is okay. The level that we expected to be tested has been tested, but the bullish structure is still very much intact. We are creating the bearish structure is still very much intact. We are creating bullish structure, but if we observe higher low, higher low, higher low, not even break of higher low. This is the previous higher low right there. So let's mark that off. That's our higher low. And then here we have bullish structure with higher. Look at me confusing stuff. My word, my dyslexia just kicked in there. Sorry. Lower high, lower high, lower high, lower low, lower low, lower low. Higher low, new higher low being created. Higher high, higher high. Let's see what happens with this pair. I think right now we're in a bit of a consolidation. RSI also not giving us any indication on the 1 hour time frame. Not to mention the fact that despite trading above 50 SMA right now with the bullish trend line, markets tapped into the 55 zone, but looks like we can still have further to fall, especially with this major wick rejection that we have right there. So I would say trade cautiously, but definitely looking for longs to the upside. Oh, so your JPY also opened at a gap down. Clearly, the consolidated phase that Euro JPY is in within the space of the resistance at 164.14 and then the support at 155.55. Markets are looking to fall further down now. We are in that bullish phase. So I would look for the markets to actually tap this level, continue further down. But again, this is not yet confirmed. Right now, we're just filling the gap. Market is trading comfortably below the 50 SMA, and if we take a look at the RSI, it is consistently trading below the 45 region of the RSI. It's tapping in the region and then falling. So I will keep my eye out for it, but low-lying levels of momentum. So if I take trades here, I'm going to have to hold them for the long term, and the risk to reward with low momentum isn't that great. But definitely for long-term trades, if you're looking to hold, we could get some good gains there. Dollar bill, Okay, so nothing happening here just yet. Markets open with a gap down, currently just making up that deficit with USD JPY. So yeah, that's pretty much analysis. Let's just take a look at Bitcoin. Bitcoin had a severe drop yesterday. I mean, Sunday madness, 6 o'clock, markets fell sharply. We're actually in the overextended region on the 4 hour time frame right now, the RSI, with markets comfortably trading below the 50 SMA. So clearly, bears as expected, still very much in control. Like I mentioned, I will only be comfortable looking for longs at that 70,000 level, 73,000 level. And markets are moving towards that level at the moment. So Bitcoin, definitely something to keep your eye on. We could be seeing a spike in this market soon, especially as the global economy absorbs the tariffs and the US builds its base. I definitely see dollar strength coming in, not right now, but soon. And when dollar strength comes in, I think Bitcoin is going to benefit from this. Either that or Bitcoin is going to be seen as a new safe haven. Either way, Bitcoin's on the winning side of this argument, and I will be looking to capitalize on that when it happens. Obviously, I don't have a Bitcoin strategy, a crypto strategy, but I'll figure it out when it happens. All right, so that is the analysis for today. Let's just have a quick look at the news for today and see what we can see. All right, no news for today. That's awesome. So, pure technical trading day. Let's get it done. Let's make some money, and I will catch you in the next video. Cheers, everyone.